Hello and welcome to this week's episode of the Scottish Property Podcast. My name is Stephen Clark and I'm joined as always with Nick Ponte. How are you, Nick?
Hello, hello. All good, thanks. Who have we got this week?
This week we've got a fantastic guest, and it was someone that was brought to us through Linda Martin and Gary Wales, who host the Edinburgh Scottish Property Podcast networking event, and they brought on Jordan Kynoch, today's guest, and I got fantastic feedback from it. They said it was really, really good, and there's so many people doing property, and they've got so much knowledge and stuff to share that you can't know them all. So it was nice that he was kind of brought on a radar by these guys, and obviously now we can get him on the podcast and share it with you guys because it was a fantastic interview, wasn't it?
Oh, brilliant chat. He obviously told us how he started off. He was a personal trainer before he had his own studio. Basically started off with no money, no knowledge in property 6 years ago. Basically ploughed all his savings into doing some property education. And now he's sitting with a portfolio of about, I think he said high 20s, nearly 30 units, some HMOs down south. The real interesting bit was the private investor finance chat as well, wasn't it?
Yeah, we got some good chat on the private finance because he was 23 when he started building his portfolio and then done his property training. And, obviously that took up all his savings. He went all into it. So he had to go and raise private finance with no money. So we dug deep into private finance and how we can raise that. And he shared a lot of cool stories as well of how he just raised random private finance on trains and in airports. And yeah, just brilliant. Really, really good.
So, moral of the story, if you don't ask, you don't get, because it is a mindset thing when it comes to asking people for money. It's not something I've managed to overcome yet because I'm too scared to lose other people's money. But if you're somebody that's got no money, then definitely have a listen to this. It's a hugely inspirational podcast. We'll cut to the interview with Jordan.
Welcome to the Scottish Property Podcast, Jordan Kynoch. Thanks very much for joining us.
Thank you very much for having me, guys.
Sure, mate. Can we start where we kind of usually start with a lot of listeners? As we'll take it back to your backstory, how you got started in property. What was the eye opener or the kind of the push that got you in that pushed you towards property?
Yeah, of course. So I basically came through the kind of traditionalist of when you were younger. So I went to school, then went to university, got a degree in sports science, and I kind of didn't really know where I wanted to go from there. So then fell into personal training. It was something I enjoyed, I loved doing. I was a sportsman, rugby and everything else. So set up my own studio, but I was working 6 in the morning until 9 at night. So it wasn't exactly the greatest of lifestyles as a 21, 22, 23-year-old. So I knew something kind of had to change. And I was kind of on as most of us have always been when we first saw property, of the DIY Homes Under the Hammer Grand Designs. And that's kind of what I saw as doing property. So that kind of gave me the little spark to think, right, can I venture into this? And it got to a point where I thought, right, let's progress. Did education, did training to kind of get myself knowledgeable and kind of in that forefront of the professionalism in a way, rather than just trying to blag it. So yeah, at 23, started into property. Bought my first flat, which is a simple 1-bedroom buy to let for £24,500. Renovated it and got it all turned around for 55, all through private investors. So as I said, I was 23, no knowledge, no money, so I had to build it all. And even to this day, after 8 years now of me investing, I'm still using private investors' money throughout every purchase that I've done, just because it is that kind of model which I've worked. And again, I'm helping them and they're helping me.
How difficult was it getting that private investors finance at 23 with no kind of track record and experience? I think there's a lot of mental stumbling block for a lot of people starting out, because they don't think they can borrow the money because they don't have that track record to prove what they're saying they can do.
Yeah, 100%. It was like, I've always been on the position of I'm never cocky, I'm just quite confident. So I've always backed myself in everything that I've tried to do. And that was one thing I thought, right, I'm going to approach people who are in my inner circle. It wasn't specifically family members, but it was actually an old personal training client that was my first investor. So I've been training her for 2 odd years at this point, 2 to 3 times a week. So we built a good relationship and she knew and trusted me. She'd been an investor and done bits and pieces with property in the past. And then I kind of just approached her, telling her what I was doing. Obviously, I've been educating myself, I'm doing viewings, etc. And then kind of just went to her with a proposal document of this deal and said, would she be interested? Can she look it over and kind of assess it, see if it would work? And then that's when she came back and said, yes, would you be looking for this investment? And I obviously just led from there. So it was one of those things that it's taken time to build up the investors I've got to this day, of course, but definitely having that inner circle or people that just know and trust you. They know that you're a good person. It's the simple phrase of people will sell to people they like, people will buy from people they like. So as long as
And everyone's got that in our circle. Everyone's got that. The family, the extended family, the family friends, people that work with, colleagues, people that went to university with. We've all got that kind of circle. And I always find that quite fascinating because people don't want to put themselves out of that comfort zone to actually approach people. And you just sound like you've got the offer accepted at 23, and you're going, fuck it, I'll find the money, and you're putting together a proposal to ask someone that it's not particularly a family or a friend, it's a client that works with you. So
yeah, and I think being the age that I was, I kind of didn't have much fear, because as you get older, you get more concerned about what people think of you, and kind of, oh, you don't want to rock the boat. You don't want to, it's the traditionalist of people don't talk about money when you're in those older generations. Whereas at 23, I just thought, well, what have I got to lose? If they say no, oh, well, I'll just move on to the next. And I didn't really have that scarcity mindset of, oh, one rejection is going to got me there. I've had rejection throughout all my life of as most of us gents have, in many different avenues of business or girlfriends and females. So it's kind of that scenario that you build up that thick skin slightly to take a no, and then you just say, right, move on, persevere, and go for the next.
A good-looking lad like yourself, mate, you couldn't have faced many rejections in your love life.
I don't know. I don't know. Let's skip over that one, I think.
I could put him on the spot now.
Back to no knowledge, no money. Like, a lot of people be listening to this and they'll find themselves in that similar situation. So, knowing what you know now, and if you had to start it all again, would you go down the same route? Like, tell us a little bit about, your education, how you managed to learn. What course did you go on? Like, where did you cobble together the money for that? Did you spend a lot of money on that?
Yeah. So it was, I kind of put all my savings that I had from building up over grandparents passing away, and obviously get a little bit from them, from just working at university, doing part-time catering and kind of restaurant stuff to build up some pots. So I basically put everything I had as a savings, which was basically 15 odd grand, into the education. So it was a big old chunk of money, and I didn't actually tell anyone about it. I didn't tell my parents, didn't tell my brother, because I knew their first insight would be, what the heck you doing? Like,
try and talk you out of it.
Pretty much, yeah. It was one of those things. It was my money. I earned it, so I'm going to do what I want with it. And I learned quickly of no point buying a car or something, because obviously depreciating asset, etc., etc. Put it into something that I can then build that knowledge from and actually make multiple incomes of money. So yeah, started and just did one of the training courses that there's plenty of kicking about, but it was back in the day when it was called Legacy. So did one of them, and came through that program of learning.
What gave you the drive? Like, I'm quite interested as well. Like, at 23, I wish I had that I suppose that drive and that belief to actually put 15 grand in everything you've got into education and backing yourself. Like, what gave you that kind of, I don't know, drive to do it? Like, this is going to be worth it. This is going to be what I'm going to do.
I think it's just the end goal of what I wanted my life to be like. So I've been very fortunate. My parents gave me a good upbringing, and obviously traveled the world with them, doing great holidays and going to school and stuff, private school. So it was one of those levels of, I would want the same for when I have kids. And it was I think I've always just been very motivated, very driven, just from my sporting background and kind of just pushing myself. I wanted to be the best, but not in a way that I would step on toes or kind of isolate myself against other people, but more case of, I was my own competition. So I'd always kind of focus against me. I know I can do better, so let's strive forward. Let's push to that next PB in a way. So I think it was just more that what I wanted my life to be like. And I saw plenty other people around, and it's the traditional, you go to school, you get a job, you then work till you're retired, then you live off your pension. And that just cycle for me just didn't work. I didn't want that to be. I wanted to be, and it was quite a interesting thought, and looking back at now when I was starting up at 23, that I wanted to be, when the time comes, like a full-time dad. When the time came, I've not got children yet, but I didn't want to be in that position to not be able to take my kids to school, pick them up from school, be at every sporting event. And it was kind of that drive as like a just family that wanted to take on and not have that limitation, and think, Like when I was playing rugby, my dad was at the side of the pitch every single game I played. Whereas there was only maybe 3 or 4 parents that were doing that, whereas everyone else was working. So I wanted to be that same role model when it happened. So I think that was probably the defining moment of where I want to take it. But obviously to that point, I've not a kid yet. Obviously 30 years old just now. But me and my partner, obviously a time to come that will happen.
I was gonna say, are you still facing rejection? Is he just waiting on the right
no,
one
no,
to
no.
fall
I'm
off?
with my missus now for 2 years, so it's all going strong. But where I wanted was then a case of kids is a later lifestyle. I want to just enjoy my life to make it and do what I want. So I kind of lived off three kind of mottos that I kind of live my life to this day. And it's do what I want, where I want, when I want, live with no regrets, and then basically be happy in what I'm doing. So I kind of didn't want to it was almost like be a shepherd, not a sheep. So I don't want to follow the rest of the crowd and what they do in their life. I'm wanting to kind of do what I want to do myself. If that followed someone else is great, but I wasn't kind of scared to kind of go alone and try it.
And
What
how
did your
do
parents do?
sorry.
Were they businessmen or business people, entrepreneurial or anything like that?
Say again, sorry?
What did your parents do when you were growing up then? Were they business people or?
Dad had his own business in digital printing. So he worked for a firm, then him and 3 other colleagues kind of split away and set up their own business based in Edinburgh. So it wasn't like big scale, but it still was their own business, and I could see what they could do as a lifestyle. And then mum
They
just
see what the
worked.
freedom it gives them.
Yeah, and mum worked in travel just with the large company. So it wasn't kind of like big multimillionaire businesses in the sense, but it was still, you could see they still worked the arse off in a way to get to where they are, and they still did till the point of them retiring. But there was just those little nuggets that I could see which were what I wanted to do myself, but I maybe just want to do more of it rather than just having those little nitpicks.
And tell us about the sort of transition from, obviously you said that you had your personal training and all that, which sounded like you were doing well at. So what was it about that that basically that couldn't give you the lifestyle that you wanted? Was it a kind of you were trading your time for money sort of thing? Is that how that works then? So you can only do so much in a day, can't you?
Yeah, fully exactly that, Nick. It was I was working, I had my own private studio, but it was a small one. So my onus was you feel in the comfort of you're by yourself. It's not like you're in a big gym that people get nervous or scared of for clients. They were in the comfort of a gym to themselves. So I couldn't scale that much more. I couldn't have another trainer in there training when I was, because that wasn't kind of the motto I gave the business. So yeah, it kind of was limited to how much I could fit in. And when you first start a business, you want to make sure there's enough bums through the doors to kind of make that profit. And I kind of probably started lower than I should have at the beginning, but then I didn't expand it, but I was still doing that just ridiculously long hours. I was happy to do it because it was my name on the door, but it got to a point where, okay, where can I upscale this? And I wasn't going to have the lifestyle that I wanted to then travel the world and go away for 6-7 weeks at a time. Because obviously, as we know, Scotland isn't the warmest of weathers in January, February. So I would then go, I've been going away every year before COVID, for 6-7 weeks at a time to Australia to see friends, family, and enjoy it, but still make business work with my properties. Whereas for PT, I wasn't able to do that. So
yeah, that money's still coming in as you're traveling. Yeah. I seen from your Instagram there, you do like you're traveling and you've been to some amazing places as well. In fact, you were in Venice not so long ago, and I was there last month as well. So
nice. Yeah,
it might have floated past you on the gondolas.
We could have, waving away or having a beer for sure.
The cheap prosecco, or you're locking eyes with your partners.
I thought Nick was one that's singing on the gondola to all the other people around down the Rialto Bridge.
Pizza and the ice cream that I was into.
Sorry, Don. So can you take us back to that kind of first one? The refinance came in, paid the investor back. What was the kind of next step on scaling the portfolio then?
So I'm based in Edinburgh. I was just making sure that first of all I was still doing the property stuff whilst doing the personal training. So my time was limited. I could only do maybe once every 2-3 weeks because I was still playing rugby at the time. So my weekends were taken up. So it was kind of make best use of the limited time I had. So I was trying to do at least 3 to 5 hours of property work a week and visit my investment area once every 3 weeks. That was my kind of target zone. So got the first deal, and it was just on Rightmove. It wasn't kind of off market. It was just a simple online. Viewed it. That it was actually listed as fire damage. So the particulars stated fire damage to the property. So I think, as we know, that would put a lot of people off from that kind of big concern. I went to view it anyway, and there wasn't any fire damage to the property. It was only in the stairwell. And Dundee being Dundee, if you guys know that, it's can be quite common having a fire here or there in a stairwell, as it does across Glasgow and everywhere else. So yeah, I basically viewed it. Obviously, the owner didn't have many offers because of that reason, and I managed to get the deal accepted. So all went through fine, refinanced, and then pulled money back out. And then I just basically rinse repeat. So I bought, my next property was 150 meters down the road. It was a repossession. Same thing, small, just basic stuff at the start, because I knew I needed to kind of cut my teeth myself, because I'm a bit perfectionist. So I needed to feel like I cut my teeth and understood every process of it. But I think that's probably what held me back and limited me as well. As a learning, I didn't reach out enough to ask for help or ask the questions, because I felt, man is man, I need to know everything and not show weakness. Whereas looking back, it was probably held me back a good 6 months from progressing quicker. But yeah, it literally carried on, got another 4.
Did the same investor come back for the second deal, or?
I got the deal before, I got my second deal before the refinance happened. So I had to get a new investor involved. So yeah.
And are these like just buy to lets, buy, renovate, refinance?
For these initial ones, yeah. The first 6 I bought were all simple, just buy to lets, 1 to 2 bedroom flats. Needed
in Dundee, did you say?
Yeah, those ones were in Dundee at the time.
Why did you not invest in Edinburgh? Because that's closer. Is that
finances wise? It was just the amount of capital needed to put in to get that return of cash flow. You'd be putting in 150 to 200 grand to get maybe £300 cash flow, whereas Dundee putting in 37,500 and getting back 250, £300. So for the return for what the capital was putting in, it just made more sense. And it was still within an hour's drive from home that I could access it easy enough without stressing too much.
And you said you were kind of limited for time starting off in those early days. Did you use sourcers and use a building team up there in Dundee and stuff like that as well to basically, so you're not involved in the projects as much?
For building teams, yes, I've basically, from now, I've got a building team in each area that I invest in across 5 different areas now. So they are just solely where they are, and that's come through word of mouth or meeting them and obviously building that relationship. But I never used sourcing agents till probably a year and a half into buying stuff, just because I didn't really know much about them at the time, and then it was just more learning and realized actually my time could be better used to do other things, to bring a sourcing agent in. So yeah, it was probably after about eight or 9 purchases that I then got my first sourcing deal from an agent.
Wow. So I mean, you're talking about 8 or 9. So what's your portfolio look like now then? How many units have you got, and what sort of? I see you do some HMO as well. So what have you?
So basically got, and it's not to sound cocky, it's probably high 20s, early 30s, something around about that.
And how much of the buy-to-lets and HMOs did you say?
Yeah, so I've got buy-to-lets. I did social housing as well, so I've got some social housing units with the councils, buy-to-lets. Got HMOs down south in Liverpool, so 4 beds. I had 6-bed HMOs, but I sold some of them. But I've got 4-bed multi-lets as well. Then done some flips and just looking at some bigger commercial stuff now. So it's kind of.
How long have you been going at it? Since when did you buy your first?
Almost 8 years of starting education, but when I first bought my first property, about 6
That's
years
brilliant.
ago,
That's amazing. And you'd mentioned about your 5. You get kind of 5 key areas. Can you share them with us as well?
Oh, yeah.
Well, we know one, Dundee.
Yeah, exactly. So basically across the central belt of Scotland. So got Dundee, Glasgow, North Ayrshire, and then obviously little honeypots a bit further around there, up in Forfar as well, and then down south into Liverpool for my HMOs.
What made you go for the HMO then? What was the kind of thought process on that? Just bigger cash flow and.
Yeah, it was. There's people I was surrounding myself with. I knew a lot of people that were doing them, and it was kind of the rinse repeat model. Like, you could see they were working well. They became very good friends of mine. So then kind of just start to learn, okay, the buy-to-lets and the social housing was kind of a cookie cutter model. It felt quite comfortable at that point. I didn't really need to put much effort into make it work because I had all my team and my power team involved that they could. I basically raised the money, found the deal, then I handed the keys to my builder. He then cracked on. He then handed the keys to my let agent. When it was done, then he just did it. So I could take a bit of a further step back because I didn't need to be involved in it. So when it got to that stage and it felt comfortable, I then thought, right, where can I upskill and kind of look for the bigger deals, more cash flowing as well like to make. So yeah, headed down south and kind of, as we always do my market research. Could take what other people did, but I wanted to make sure it fitted around my model with my return on investment and kind of what I was looking for as an investment. And yeah, started to buy there. So took a bit of time and a lot of travel up and down. I have to admit that was a bit of a slog, but that was when I was out of the PT game, so it was full-time property. So I had that flexibility that I could afford to be down there for 3, 4, 5 days a week at a time to then assess what I was doing and kind of keep on tabs with the builders. So yeah, and they've been good. Again, market kind of changed now, so it's kind of, I've not bought anything there for probably about 2 and a bit years now, because it's just with Article 4 coming in and slight changes to the rules, but they're still performing assets. But it looks like it's at a time that I might sell one or two of them because of the appreciation that there has been.
Yeah.
And actually pull out a lot more money, and for the capital it's making, for the capital it could produce, it might make more sense. So I just kind of wanted to diversify.
Sorry, that's interesting about the HMOs, because like I talked to Gillian Green, who you know as well.
Yeah.
And I think they just bought an HMO down. Well, they chatted about it already on the show down in
I actually helped. Darren came around and looked at one of mine before they bought their one.
Right. Okay. So, like, I mean, and from what I see as well, like, I'm always like looking at these, these English investors on Instagram and all that, and some of the numbers you see are phenomenal and that. But then speaking to Dan and Gillian, they're like, it's not all rosy. I mean, like, there's a lot of changeovers. Like, I mean, just depends on your tenant market. But I mean, give us your honest kind of appraisal on that. You're thinking about selling now, so what are the kind of downsides of that you might not see on the kind of Instagram posts?
Yeah, I would completely agree with those guys. It can be a very quick occupancy turnover, and if you can get students involved, then obviously you've got them guaranteed for 10-month tenancies, which is great. And then you might take away half month rent if they want to continue for year 3.
And that could be changing now, of course, because England are changing things up a little bit, more like the Scottish lease.
Yeah, exactly. So it's a bit more hit and miss, but if you've got students in, it can be a little bit more comfortable because you've got a longer term. Whereas for young professionals, there is that you kind of got to think, would you want to live with 3, 4, 5 other people and have to like deal with everything they go through? Even though you might have your own bathrooms or bathroom between 2 people, it does get a bit on top of each other. So it's not all rainbows and sparkles. There is a lot more underlying with the expenses and maintenance costs, like having the council tax. If you don't have your students involved, then I'm covering council tax. They're looking for Virgin or Sky.
What about the energy bills at the moment as well?
Energy bills is extortionate. So there's having to be like a cap that we've put in our tenancy agreements, that they are limited to like £50 per person per month, but then it still racks up a lot of money.
I need to go back to the old coin meters. Don't know if you remember them.
No, I don't remember them, but I almost like using the Nest or something as well. It could be a potential. But yeah, I kind of do all my properties and I see how much they'll make over each month and over the year. And some months can be fantastic, some months not so good. So it is depending on what maintenance needed or if there's a new turnover and tenancy finder fee. But it's just got to that point. All my properties down there have made me money, and it's been good money. But
how long do you appraise the performance of that asset before you make a decision like, I'm going to sell this one, or this still stays in the portfolio, it's still doing good? Because you touched on there, 1 month you're going to get hit with maintenance issues, and a few months in a row could be really good, and then you could get tenant changeovers which affect the cash flow. Do you look over a year period where you look at the performance of it over a year?
Yeah, I'll look at it over the whole year. So I've kind of had these now for, and this is where my board comes in because I can see when I purchased them. So I've had these in my units for what, that was 2018, 2019, 2018 as well. So it's been a good number of years, and I've been able to see the levels of where they've been over those periods of time. And for the amount of money that it's gone up by, like, you can be selling them for in the 200 odd thousands, and my mortgage is at 127 grand. So pulling out a lot of equity there, and all the investors have already been paid off. So it is literally just
Your cash now.
sitting cash there to pull. So yeah, it's kind of just seeing where can that money be used better. And like I said, I'm looking to, like, for me moving around to these 4 or 5 different areas I've got, it is more the diversification. I want to make sure that if, for instance, Dundee didn't quite operate well and there was a slowdown in properties coming on the market or tenancy, then I knew I had another 2 or 3 different areas that would still be performing. So I kind of spread my load to make sure I was always comfortable in making profit. But I'm looking more into some bigger things now. Like, I recently just bought a small portfolio of flats with commercial basement and car park. That's just all been finished and done. So it's kind of then I'm wanting to challenge myself and go to the next level. So looking at some other commercial things. So me pulling out this money might actually, for the cash flow that's making, I could probably 2, 3, 4 times multiply the cash flow I could make with that same money into something else. So it's kind of just assessing it in that way, because I'm at that level that profit's coming in, and it gives me a good enough lifestyle.
Yeah, well, that's
So
it. I'm assuming
worry.
once the financial freedom's achieved for your portfolio, you can now look at diversifying into getting something that makes you excited to get up in the morning, whether it be the next level of deal with portfolio or a bigger development or commercial.
Yeah, yeah. I've very much been on this, and I've always said to any of my coaching clients that I have as well, and people I work with, is I've never chased, like I said, I've always wanted to be a shepherd, not a sheep. I've never chased or kind of compared myself to anybody else. So if a friend of mine is doing a apart hotel or like building an office block, that's not motivated me to go and do the same thing as them, because the stress, the hassle, the pressure on it, is it worth it compared to just doing another 2 HMOs that makes me the same cash flow within a short period of window compared to a year's worth of headache and hassle just to kind of say, I've done this. I've never been motivated by chasing the shiny penny in the sense of keeping up with the Joneses. I run my own race, and I'll just kind of assess it that way. But I still get motivated, and I still get kind of excited by seeing other people and friends of mine doing these things. But I'm not then jumping to do that, because I've done some bigger things in the past and it was a headache. So I was kind of, do I want to go through that same hassle or make my life a little bit simpler and easier, but still do the simple things well continuously?
Like, would you say, I mean, you've been going 6 years now, and you've got a good portfolio, buy to lets and that. Would you say you're at a point where you're like leading a comfortable, fulfilling lifestyle, or I mean, financially, are you able to do the things like the traveling and all that you want to do, or is there still a bit more work involved to get to that point? I mean, you're saying you're not bothered about the shiny penny and the materialistic things.
There's certain materialistic things I do like. I'm a fan of certain bits and pieces, like my watches and traveling around the world and having those experiences, definitely. So it's a tough one. Still motivated by those, but but portfolio is in a position where I can live a good lifestyle. I'm comfortable, but it's still not where I want it to be. There's still more that I want to achieve and get to be, because again, I've not factored in the time when children come around, and then the expense that happens, which I've learned and told is extortionate. So having these extra factors, it can still, yes, if we had children, we can still make it work and we can be comfortable. But I'll always
do you have a figure in mind, like where you want to get to? Like,
there's a certain figure, but it's every time I've assessed it every year, it's changed because
especially with inflation.
Yeah. So like it was a friend of mine said, right, if you could, what would be your financial figure? And I said 20 grand, just off the cuff. This was when I first started. Per month, yeah. But then he just went, okay, cool. Right, break it down to me. Tell me exactly where that 20 grand's going. And it was like, right, what sort of house do you want? What's the mortgage? How many cars? Schooling? Healthcare, gym, food, etc. And it got to a point of it could only cover, it was like 8 or 9 grand at that point as like my best life ever that I couldn't ever think of. So he then said, so why are you chasing another £11,000 cash flow when you physically don't need it? Look at something else like capital and then build it that way and have lump sums. So it does change, obviously, with things that I want to do. And
do you track your net worth? Something I started doing a couple of years ago, which I felt really surprising, because it's kind of property investors, you kind of build up this equity. You're looking at, you're focusing more on the cash flow constantly, but in the background, this equity just keeps on building. You never really realize it, and you're like, shit, like let me break it down and look at the assets versus liability and actually do a net worth tracker. Do you do that as well?
I have done in the past, yeah. I normally do a yearly kind of assessment of the portfolio, but I'll break down my kind of targets and goals every 6 months. So everyone kind of I set my goals every so often at the start of the year, but everyone likes to do it differently. Some people do it month by month, every quarter, but sometimes I don't feel there's a quick enough change to make it every quarter. So that's what I do.
Property, yeah.
Yeah, so that's why I do a 6 month window, look at it briefly, but it'll be like a yearly kind of assessment. Where am I at? What can be done better? What are my goals, targets, to then progress at that stage?
I feel a wee rant coming on here, but you know what really annoys me is when you see these Instagram profiles, these guys that say multi-million-pound property portfolio. Or Stephen, I think you might have that in yours actually. No,
I'm waiting on it. I'm waiting on it.
Or a 7-figure property business or portfolio. Like, what does that actually mean? Because like, most of these portfolios are obviously 75% loan to value. So like by the time you actually kind of pay that down, then what have you got left? You're probably not 7 figures. Do you know what I mean?
100%.
And it's the same with business as well. You hear about, business owners or entrepreneurs saying, multi-million-pound business, or it's whatever number of figures it is, but like that doesn't mean shit. If you need to look at the actual net figure, net profit, what have you got to actually spend each month? Do you know what I mean? Yeah, that's the important figure. So
I've never been one to kind of shout about kind of what I've got or where I'm at, because it's, as long as it makes me comfortable. It's like there's people who do it in many different ways, and like you're saying, Nick, it's the no one knows the real scenario, and apart from yourself, for when you break down, right, how many are unencumbered, how many are mortgaged, how many have, like, when I first started, I wasn't looking for capital appreciation because I knew the areas I was buying in weren't going to be jumping up 7 to 10 times or doing that multiplier over a period of time. It was a case of, I'm just wanting to make cash flow to then give me that income to give me the lifestyle, and then I can look at flips to give me the capital. So yeah, it's like you're saying, it can be a bit of a deceiving scenario with certain people posting on social medias or just saying we've got this multi-million-pound portfolio. Yes, you might do in actual values, but the amount of assets you own can be a lot less.
Or if they're in London, a multi-million-pound portfolio, they might only have three
that could be a car park for all you know.
Exactly. Well, no, but I think I'm always interested to know, like, obviously, number of units and how much you've done over time, because that gives the listeners a real boost to say, wow, that's amazing, like, so
you always focus on the number of units, and I think the number of units is fucking meaningless, because the amount of people that I've known that have bought units years ago and I've got 30 properties, and you're like, but you're in negative equity, or they're not even performing, they're not even cash flow. Whereas when you're listening like to Jordan's story, where he's done them right and got decent cash from they're in his portfolio and assessing them, that's where you've got a good property investment. It doesn't matter the amount of units, it's the performance of them.
And it's the amount that the units bring in. So like a buy-to-let can be 250 quid, whereas an HMO is £1,000. So if I said to an individual, I've got 10 buy-to-let or 10 properties and I've been doing it for 10 years, they're going to think, well, you're not really much of an investor. But if that money is bringing in 10 grand a month easy, then it's a different story compared to having 50 buy-to-lets and it's only bringing in 5 grand. So it is that kind of every time someone, and you gents will probably have it as much as I have as well, of everyone always asks you who don't know or say that you do property,
how many properties you got.
And that's, I'm just like, I say to them, I've got enough that gives me a happy lifestyle right now, but I'm still working.
We've been doing this.
Mine's always opposite. I always just come up with a cheeky answer like, none, the fucking bank own them, or something like that. Like, I just say something.
We've been doing this podcast for 3 years now, and Stephen Clark still not told us how many properties he owns.
Changes every month.
Well, that's true.
And that's a good thing, I suppose.
Can't keep up.
Changing every month.
Can't keep up. Mine's changes like one every year. So good.
Love it.
But you seem like a systems man. I mean, we're watching you. We've got you on Zoom here, Jordan. You've got like a wee office here in the background. You've got your wee post-it notes up and your whiteboards with all your properties listed. So and I've seen your Instagram as well. You love a post-it note. Tell us give us a few hacks and tips for our listeners, and share that post-it note one that I've seen you do in your refurb. So what's that all about?
Yeah, sure. So it's at the end of the refurb doing snagging. So as we'll know, there's always plenty bits of snagging that a builder might think they're finished the works, or the painter, but we go in and we've got obviously exceptionally high standards for what we want it. We're paying the money for the work to get done, so we want it done right. So I would always go round during the snagging phase and have post-it notes, and I would physically post-it note. If it needed to be a whole wall, I would do a whole wall of what's required. So go to B&M, WH Smith, wherever it might be, and get multiple different colored post-it notes, and I kind of color coordinate to each trade. So the last project we've just done, there was 4 flats in the block that we did, so quite a bit of things need to be touched up on. So my painter had pink post-it notes, my plumber had yellow, my Sparky had green, and my joiner had blue. So they knew physically that was their work that needed to be done. So I would have the post-it note, and because it's obvious to my eyes, it wouldn't be obvious to them. So I would physically write on the post-it note, repaint wall, or cork round the socket, just to be, it's almost like a 101 for dummies in a way. Not saying my tradesmen are dummies, but
does it get their
not
back
saying
up
they're
then?
cocks either.
Does it get their backs up then? Does it kind of rub them up the wrong way when you've come at the back of them, or they just accept that you're paying the bill?
Yeah,
you're
I'm very honest with all my trades. I speak to them. I'm on site occasionally, and like I won't be the one that just hands off and do nothing. I was carpet boy was in. I was literally putting all the scraps of the carpet in the bin. I like to get my hands involved if I need to, not that I have to do it, but it's more I hate just sitting around doing nothing. So I kind of want to at least be there if I need to be, to then do something else or make sure the job's done right first rather than bring them back. So I'll get my hands dirty. I'll carry the breeze blocks up the flights of stairs if needed, or kind of do the dirty work and smash in a kitchen if required. But they don't mind, because they know what my standards are. Again, the teams I've now used, they've done multiple properties, so they kind of already know what to expect. But I will just say, oh, can you just do that? Just do that. And it's only half a day's work to then finish off the snagging. So they're not overly worried or stressed by it. So no, they don't really get their backs up anymore. I think there's been a few times when a painter's come in and literally majority of the flat had to be redone from just like, the door was done once rather than twice coated, so you could still see all the old yellow through the gloss. And same thing with like the Sparky hadn't moved basically the fire alarm away 30 centimeters from the wall or the light bulb. So it's these simple things which they just don't comprehend because it's a job. Whereas I need to look at it as right, this needs to be hitting all regulations, even from HMOs. The Sparky came in and basically just put sockets where he wanted, just to fit 3 double sockets in the rooms and an aerial point and a internet ether. And then obviously for HMOs, they have to be so specific in where the furniture is going to make the room work, because they are tight enough. So I literally had to get the Sparky to change every socket in the room, because the bed had to go here with the sockets on either side. The aerial had to go on the opposite side of the room where the desk was going to go. So it was these little bits, but I did the floor plan and I let them know all about it, but they still didn't follow it. So yeah, occasionally you got to be on top of them. But yeah, post-it note is kind of my godsend, that when it's done, they remove it and then they know for sure. So that's definitely one hack, which saves you having to be there all the time. You get it all posted up around the flat or the house, and then they should obviously, it's their responsibility to then get it done.
Is it an all trades company that you use in each area, or is it individual trades?
A mixture. So Liverpool was this main builder who was actually a plasterer, and he had a couple members of his team, but he brought in subcontractors for certain things. And then same with everything. They're all kind of 1 to 2 man bands, and then they'll subcontract other boys in. So I kind of like it that way. I'd rather have someone which is more personal, that I can have a text or a conversation with, rather than having to be a multi-corporate company that you're paying for the offices, the vans, all those extra bits. Whereas I'm literally dealing with one person, they get it done, and it's their responsibility to project manage for getting everyone else in line and in check, because it's on their head for getting the payment at the end of the day.
And do they ever tell you to shove your post-it notes up your arse?
Probably behind my back, yeah, definitely.
Yeah.
I have when I've had my main guy Chris, I came out of the post-it notes and I was just like, I sent a picture and it was like, be prepared, and he just replied back to me with just that kind of the red emoji face with the swear words across his mouth, and it was just, they know what to come, but but they know as well that the standards are high, and if they do the job right, they'll get another job. And that's a big thing, I think, with another hack of post-it notes is I've never promised any tradesmen multiple jobs. They're only as good as their last job they've done. So I'm never going to go to a new building trade or a new team and say, yep, I'm going to be buying 5 properties in the next year, 10 properties the next year. You're going to get all this work, because that will probably make them slack and not do the job correctly the first time, because they think, right, we can sit back here, we can kind of skin through this to get the next job done. So I've always kind of told them in a polite way, but you're only as good as your last job. So do this job good, then you'll get on to the next one. If not, then I'll be bringing other boys in to cope for it, and
yeah,
it might be
and
better.
I feel like it's definitely getting, I don't know if you find this, Stephen, or you guys, Jordan, but I feel like it's definitely getting a bit easier to, get tradesmen sort of on side, because there was a few months there, or 6 months past there, it was really hard to get them, and obviously they were cherry picking their jobs, and they were kind of ruling the roost. But I think the tide is starting to shift a little bit, obviously with the whole macroeconomy and people starting to tighten up and that. And that in the last couple of months, I've had a few people contact me looking for work. Do you know what I mean? So that's a good sign. So yeah.
I definitely find that as well. Same with estate agents now contacting you and chasing you up and giving you opportunities and giving you a heads up when something's coming in the market that might suit you. That's something for the last year didn't really happen because they were so inundated with huge demand.
Yeah, getting back, I mean, I think you like to keep tabs of what's going on in the news as well. Jordan, what's your kind of view on like the kind of landscape at the moment of rising interest rates and the inflation? Does that make you nervous at all? Like, have you looked into your numbers on your portfolio and kind of looked at how things would be affected when you come to obviously refinance and fixing in on kind of new deals that have increased?
Yeah, so truth be told, I don't actually watch the news in general because it's always just doom and gloom. So I'm more of a positive mind guy. So I'd literally
I've seen you post a few BBC articles on your Instagram feed.
Yeah, but that's literally just been from snippets of other people having posted it, and it's been an interest. But I don't think I couldn't tell you last time I sat down and watched the BBC News or evening news, just because it's not always more negative than positive. And yes, okay, we need to learn and need to know, but I know that information will come to me at some way, some shape or how, from seeing other people post their articles. So, but yeah, for the kind of how the land's lying just now, I've always been the fact of trying to fix them for 5 years at the moment. That's what I've kind of done majority of my portfolio at this stage. Even with the newer ones, I've been trying to fix my rates, interest only rates, for 5 years, just because, again, it's the risk aversity, I think, in my business. I'm all fine for taking risks and pushing it and trying to extend. However, if I know I've got this money coming in consistently all the time, every month, from what my outgoings are, then it just allows me to run my numbers a little bit easier. And I know where I sit as a business and sit as me personally consistently, rather than thinking, is this going to be variable over X amount of time? So knowing that kind of safety, 5 years, it's done. I know my outgoings, I know my incoming, perfect. I know I need to get X amount more this year to then upscale it. So for that side, I kind of just try and fix them as much as I can. Obviously, they are changing. I've just had Shawbrooks come back with a 4.93 or 4.94%, which is the highest I've ever had. It's always been 4.3 to 4.5. So it does make a difference. But again, it's one of those things that you kind of have to adapt. And I kind of knew that was happening. So when I was running my numbers, I was stress testing all my figures at 5-6% anyway, as a worst case scenario.
Are you reviewing any of your rents as well at the moment? Like, we've got a lot of landlords, and we're speaking to a lot of landlords, something we're actively doing. How are you dealing with that one?
Leaving it all to my letting agents. I'm just literally, they've actually approached me saying, I think we should do rent reviews now, because we prevented that over the last 2 years on COVID, rightly so, because obviously where people are at. Thankfully, touch wood, I never had any issues. I never had a single void or missed payments throughout the whole of COVID. My portfolio was still at full capacity, at 100% occupancy, and rent coming every single month. So I was very fortunate and happy. But I think that goes down to the team I had, and obviously the letting agents pulling in the right individuals that they knew had their guarantors or had sustainable jobs.
Yes, big up the letting agents.
You couldn't do it without them, to be honest. I wouldn't want to do their role, because I don't want to travel 2, 3, 4 hours to go and deal with something minor when I might be out for a Sunday lunch or something, or on the golf course. So I'm all for having letting agents in my team.
Essential part of your power team.
Absolutely. They don't get enough credit, to be fair, do they?
No, but yeah, it's so I'll kind of balance it and see what kind of lies around. But it's the way that market is now, you kind of just have to adapt to it, see what's coming. So that's why I'll just kind of stress test my numbers at the very beginning, because then I know I've got it fixed for a period of time.
So are you still growing? Are you still buying, but buying, still just buying right? Make sure you're sticking the kind of criteria that you want.
Yeah. So I'm still buying. There's no reason to stop or slow down at the moment. I'm still hungrier than ever and kind of wanting to push and upscale. So my kind of limit is 33% ROI. That's kind of where I sit at for my return on investment for
on cash left in the deal.
Yeah, on cash left in the deal. So
after
normally it's going to be my personal cash, because my number one priority is getting the investors' money back out. They pay all of that off. I pay all of that off first, and if there's anything left, then it might have been my own little pot from part of the refurb.
Mm-hmm.
So I'll make sure that I can pull it all out and have 33% as a worst case scenario, because going over building the portfolio up, when I first started, I had to do money in, money out, because I physically had no extra money to leave in the deal. I had to pay everyone back on point. Whereas obviously as time has gone on, any new property I buy, I'm not depending on that new property to make me profit, because I've got the portfolio that gives me the money that I need to give my lifestyle just now. So I'm able to afford to leave a little bit in to then recoup that back. So it's almost like Brucey bonuses. Every 2 to 3 years, there's another new hit of money that the money's replaced in my bank account to take it back to zero. And then after that point, it's then in my head profit margin.
Is that where the flips have kind of came into your kind of property strategy as well, as kind of building up that capital pot for yourself?
Definitely, yeah. I like to try and do at least 1 to 2 flips a year, and that can vary. I like to try and, if I can get between 15 20 grand profit a year from flips, if that's one deal, or if that's 2 or even 3 depending on the size, then I like to have that. I call it a war chest. So I like to have that war chest in my business that I can then utilize to pay the refurb for a deal, or pay an investor back if something is taking, as we know, the burden of refinancing and the time scale it takes it can be extortionately painful. So if I need to pay an investor back, then I have that pot that I can pay them back on time without fail, and then I'll just have that kind of hit that money's left that account, but it's almost like free money because it's been profit, and then that will just recoup back to its level 0 point or again when the rentals are coming in, and then it's when I kind of calculate it as being now incoming property strategy.
And see this whole, private investor financing world, which I don't do any at all of, and it's always interesting speaking to guys who do it like yourself. Like, how do you see that playing out now with, all the doom and gloom that's in the media? Do you think it's going to be harder to get people's money to invest in property, or do you think it could be easier because, like, literally they're losing more money if it stays in the bank again?
Yeah.
How do you see that? And the other question I want to ask you as well, you said about that initial investor that you found. Are you working with a number of investors now? Have you got like a kind of core group that you go to?
Yes, yeah. So that first investor, I think she's now in her 6th or 7th cycle with me of just repeat, because it's money that she had in the account, and then she's just making the profit from the interest, and then she just pays me back. So she gets the interest and her lump sum of the investment, but then she'll keep the interest, and then she'll just give me back that pot to then go again and again. So, and that's kind of
year terms with investors like that.
Yeah, I do it deal by deal basis. So if I can refinance and get the money back out within 8 months, then they'll get the money 8 months, and they'll get their interest per annum of just that time. Basically, the amount of time I physically used it, they get paid for that period of time.
Sometimes have you ever fallen short? Like, say you don't get the valuation at the end that you'd hoped for, and you fall short of that figure to then repay back your investor. Is that then when you need to take your own money out?
Thankfully, I've only ever had 2 refinances fall short, and it was only by £5,000. So in that kind of thing, it wasn't a big hit at all. But for like, if I had to pay someone back, if the time scale, if it ran on more, or the refinance didn't happen. So that's happened again twice in my eternity of investing. Was one time was over when it was Beast from the East back many years ago, and no surveyors could come out and basically value the property. So then that basically put an extra month on to when I said I'd pay my investor back. I knew that was going to be the case, so I called them up in plenty notice and said, really sorry, that this is the situation. They knew because they were living through that same situation. Do you need all the money back now, or are you happy to make another month to 2 months worth of interest on top of what you're already going to get? And they said, no problem, I don't need it. Whereas another person needed half of it because that was paying for their kids' university halls. So I was like, cool, I can cover that right now, here and now. Don't worry about it. And then you'll just make interest on that remaining pot. But I've always kind of given myself enough terms of, like, it'll be 10 to 12 months, knowing worst case scenario. But if I can pay them back sooner, then win-win. So yeah, for those investors, they normally recycle. But one investor will then, so my very first investor, she then introduced me to her sister over when she then got her money back, that then paid to go away for a holiday with the family. Then her sister basically said, so how you managed to afford this? Oh, Jordan paid for it. And she's like, whoa, who's Jordan? I thought you married to Alan here. And then it was kind of was like, yeah, I'm still with him, but Jordan's a guy that as an investor. So that then happened. Then her sister then got involved with me.
Brilliant.
Started to invest, and then her sister got the new windows, and then her best friend came over from Ireland. She was then showing off, oh, do you like my new windows I've got? Who paid for them? Jordan. Who's Jordan? So it's kind of word of mouth has happened because it's the reputation of, I've never not been able to pay an investor back when I've said, or within the time frame, ever throughout the whole 8 years of investing it.
And are these people just like, they just don't have an interest in like actually doing property themselves? Like they don't really, they're not interested. They're just wanting a bit of extra money, a return.
Yeah. It's money that's sitting in the bank doing nothing for them. They don't have the knowledge, the energy, the skill set, team to be able to kind of do it themselves. And it kind of works out. And I've approached some people to say, you can either do it yourself, which they're interested in, but that might take you then 2-3 years to actually get any sort of profit at this point, or you can pass it to myself and you'll make X amount of money within 8 months and you don't have to lift a finger. And it comes down to what is most easy for them. And when they've got a mum of 2 kids and a business, they don't want to go through the hassle. So they thought it's an easier situation just passing it to myself. So it's all like obviously legally bound. We've got loan agreements in place and charges for against the properties and stuff. So it's all like above board. But yeah, so it just kind of cycles. And
how much do you have to update them? Because I mean, I guess it really depends on the investor, doesn't it? I could imagine some people are like, you know, if they give you 50 grand or 100 grand or whatever, they're going to want to know like where things are at, that they're going to get their money back in time. Do you know what I mean? And they'll be texting you for updates, photos or whatever, but then there'll be other ones that are probably a bit more laid back about it.
So I tell all of them, you're not going to hear from me the only time you're going to hear from me is when I need to ask which bank account the money needs to be transferred back to. And that's kind of it. So every investor I've come across, they've not been interested by what I'm doing because they don't have any jurisdiction to state what property I'm buying, what decoration I'm doing. They are there just as finance, but I'm still the owner of the property. So they're there just as that vehicle for, they can make a lot more money from doing nothing, and not they have to click a button to transfer the money and sign a document, and that's all they have to do to make 6, 8, 10% interest. So
do you get them to loan it into your limited company, or do you get them to loan it to you personally and input into the limited company?
It varied on, initially I was buying everything in personal name because that was tax efficient for me at the time from what my accountant said, but then now it's come coming into a limited company. So I'll buy everything in the limited company. There has been times that we've been said you can put it into the personal name, then do a director's loan, personal to limited. I basically speak to my accountant before any transaction I do to say what's best suited, and then they'll advise which route I should follow, depending on obviously my.
Do you speak to your mortgage broker for that? So obviously a lot of lenders will be looking at your bank statements and asking where's that lump of cash coming from, and a lot of them won't like it if it's a private investor. How do you any tips around that?
Yeah, so I've, like I said, every single purchase I've ever done, I've used private investors for every single one of them. So I've never had a issue with refinancing. But there are some lenders, as you said, Stephen, that are a bit more hesitant on it. But we just literally tell them it is private money, so it's not coming from a bank or anything like that. We just say it's private funds, and that's all that the broker ever says, and there's never been an issue from that point.
I always find it fascinating when we speak to people like yourselves, and there's so much money out there that people are getting, and it's all based pretty much on trust. Because at the end of the day, it's just a loan agreement. They've not really got any security on the property or anything like that.
Well, you can put the charges on depending, so you can put that first charge, so physically that, because I'm buying it all cash rather than buying it with a mortgage, so I've put certain on first charges
first charges and that if you're buying it cash. So and then I was going to say, if I gave you 50 grand and then I saw on your Instagram that you'd buggered off to Australia for 3 months or something like that, I'd be like, wait a minute. Do you know what I mean? But that's where the trust comes in, and that's where the relationship building, these things are not just going to happen overnight. And you'd obviously had that client that you'd worked with, and then it just all stems from, and then it's like a snowball effect. So that's brilliant, man. You've done amazing.
I was hearing that there's a story that you shared that you spoke at the Scottish Property Podcast Edinburgh event a couple of months ago, and you were sharing some nice stories about how creative you've got to raise private finance. Can you share any with the listeners that maybe missed out on that?
Of course, yes. So money comes from your least limiting situations around you. So I've raised money from scenarios which I would never have ever dreamt of. And like Nick was saying, sometimes it comes down from trust to people who you know, but other times it's literally word of mouth from someone's passed on the recommendation, or it's also more you're just showing your knowledge to the person. So even though I've had investors who I've never physically met, I've been recommended, I've had a Zoom call or a phone call, and they're like, fine. But because I've got track record, it's helped. But even when I first started, it's because I had all the answers that made the biggest difference. So certain individuals, and before I say about the creative ways, when you're saying about me escaping to Australia and stuff, I actually have used that on occasion to an investor, because I know what they're going to ask me before they've even asked, because I'd have thought the exact same thing or have heard it before. So I said to this investor, who I knew from the past, it was a brother's friend, and I said to him, I know you're going to be asking me what happens when I transfer you the money. And I just kind of made it a bit cheeky, a bit of a joke to make it lighthearted, because when people talk about money, they get very uptight and a bit tense. So I try and really diffuse the situation, make it as comfortable as possible. So I then said to him, oh, you just transfer me the money. I then book a first class ticket out to Australia and stay there for 6 to 7 weeks. And I just go stunned silent for 10 seconds, because they know I've done that, because they can see it from my past social media, and they know that's what I do every year. And then you see their face just drop, and I just look at them saying, what do you think happens? Money gets transferred to the solicitor then sends it to the selling agent, job's done, sign the documents, we're all good. But that moment of just that couple seconds for me to then break that tension and ice really helps with the whole comfortable, and the conversation changes completely after that moment, because you can just feel a bit more relaxed, and they feel that, okay, it's not needing to be as tense a situation as they think it is. So so I have kind of used that in the past, to be honest, but obviously I've never used their money to then go traveling. But yeah, my creative ways, I've raised money from a train journey from Edinburgh to London. So I was on the train, and 4 hours on the train, you try and be busy working. So I literally had my laptop and I had floor plans in front of me for a new deal. I was on the phone to my builder, And it was a busy enough train, and literally just started speaking on the phone. Oh, so it's going to cost 50 grand. Right. I'll reach out to my other investors and see who's interested to do this next deal. Phone goes down. A couple of minutes later, this guy across to me on the table says, so what is it you do? And I was like, oh, I buy houses, beat the banks, give people free holidays. And he's just like, what now? And the first question was, how do I get free holiday? Or how do you beat the banks? And literally that conversation started. He was the head of a pensions fund, so obviously quite a bit of money sitting there. And then he was like, yeah, let's meet up for a coffee. Let's talk over the deal that you're doing when we're back in Edinburgh. And then that was it. He had 100 grand to play with. I think I took 60 because that's all I needed at the time. And that was literally from a train journey. I've raised 50 grand from the airport flying to Australia. I was sitting in Hong Kong, a business class lounge, flying out to Australia, and literally again, laptop open with floor plans. I had my private finance document beside me, and I was sitting like 2 seats away, sipping my champagne, having some food. Guy sits down next to me, go over to my laptop. Nice to meet you. Where are you traveling to? What are you doing? Conversation, and then there's 50 grand from him. So he basically verbally agreed. We spoke for an hour, showed him the deal. He verbally agreed it. Then we basically did it all when we both got back from our travels back to the UK. There was money there. So money's come from my brother's ex-girlfriend.
That's brilliant.
I'm going to travel everywhere with floor plans. Brother. It's going to be on everything.
Honestly, take that to your heads, man. Like that. Walk around the airport with a floor plan.
Because people are interested. People love to know about property, and some people know property from just TV shows, or some people know property from like seeing it from other people doing it. But it's more the interest. So I never shove it in people's faces, but I let them approach me and be interested, and then I can say, you've opened the door for me to now be speaking to you. So then I can then not go guns blazing, but I can then kind of pitch to you in some way to let you know what I do. But I've never once asked for money. And that's kind of a big learning key point for my side of things from investing and having private investors. I've never physically asked an individual for money. I've just shown them the opportunity of what I can give them with the return, and it's their decision if they want to proceed or not. So I've never kind of forced anyone or asked anyone. It's the case of, this is what I do. If you want to know more, let me know.
That's amazing. It's great to see what's possible. It's really given me a boot up the arse, and like it's really inspirational when we hear those stories, because a lot of people just have that block, like it's not possible. Nah, people are not going to give you money. What are you talking about? Do you know what I mean?
If you don't ask, you don't get though as well. And
surely this whole private investing finance, from the way I've found it the last few months, this is only going to get easier, a hell of a lot fucking easier. If people are sitting there and all they're hearing, it's in everyone's face, it's inflation. People sitting there with 50 grand, 100 grand, sitting in the bank going, oh shit, this is worth a hell of a lot less next year and the following year, and when's it's going to calm down. So I think that's going to motivate people to go out there and put their money into something.
It's the balance of, if people have got quite a bit of money, and this is how I found it, people have got a bit of money, they're actually more hesitant than people that have got little money, because the people that have got very small amount of money, they're desperate to make more money from that. So they're willing to take more of a risk on themselves to think, right, I've got this tight ball of money that I need to save because this is all I've got, but they're willing to give it out to get more back from that, compared to people that have got more, that feel that it's a risky, so I better just keep a hold of this all because they've got a little bit more sitting in the bank. So
I was thinking of the opposite way, when from my experiences, is the ones that have got the bit more, they're easy, got a few 100 grand sitting there, they're quite willing to give you 100 grand. They're like, all right, it's 50 grand, there's 100 grand. Whereas the ones that maybe got 100 grand, try and get looking 50, 60, 70 of them, they're like, oh no, they want to try and put you through the rigmarole and ask you all these questions, and they're just so apprehensive because it's all they've got in the world. So that's an interesting take on it.
It's different, different individuals, and it's the people that have got a lot of money as well. Like, depending on what percentage you give them, they might then think, well, actually, it's not worth it for me, even though it is. But in their heads, they're thinking, oh, well, I've got this 100 grand in the bank. If I'm only going to get 6%, well, you're making what point is 0.5 in the bank or 1 in the banks now. So you're making 5% better with me, but they're thinking in their head, oh, but that's still too risky. I need to make more. So I found it's very different. There is the odd individual that has more money and they're willing to put it out. But over the majority of my investors, they've probably been lower level, between 20 to 50. rather than it being 100 to 200 to 300,000. I've had a couple of those bigger ones, but there's been more. But that's potentially just the environment I'm around and the individuals I know, rather than it being big people. But
I'd agree with that as well. I certainly find the same, that the other size of pots, like that you get quite often than
yeah.
Someone said to me recently when I was asking some more experienced business owners like about raising bigger private finance with bigger deals. You're always trying to push yourself, and he was saying it's so much easier to raise a 10 million than it is to raise 100 grand.
100%. Yeah.
And I was like, all right, that's an interesting concept. And he says, yeah, he says, because the people you're speaking to understand investment and money and compound interest and making that money work for them. Whereas the person that's got the 100 grand and you're trying to get that smaller pot of them, they're more, you've got to try and hunt them out.
And and even like I said, I'm looking now into, I've still got the portfolio running and looking at those strategies, but looking at the bigger stuff into the commercial things, then it's a case of that you don't actually need investors all the time, because you can get your 100% lending from the banks for your for your refurbishments, and you can get multiple other options to help you purchase commercial deals or other bigger value. When you think, oh, I need to raise more money, if it's a £1 million purchase, but you only need to actually take 35% of that as a deposit, but then you can get 100% lending from a bank, it kind of juggles that it depends on the individual you're speaking to, and they might be more accustomed to that. So that's kind of where I'm looking at as well. It's still be doing my small stuff all day long, because it is bread and butter, it's cookie cutter that I love to do, and it gives people homes, and that's another big incentive for me. Like, I've had tenants who have been homeless in the past or abused in the past, and then they've got a home that they can actually create as a safe haven. So that's actually quite a fulfilling thing, because I don't love bricks and mortar. I don't go around properties stroking the properties and like kissing it and thinking, oh, this is amazing. I love the transformation. I love creating a home out of a shithole and then being able to give someone that home that they can create memories in a family in or whatever. So that's kind of a big motivation for me. So I'll always still keep doing those smaller stuff, but then looking into the bigger things as well that can maybe leverage that to focus on bigger scale.
Brilliant. Well, I think we've hit the hour mark, Jordan. So you have been absolutely brilliant in sharing all that, and I think the listeners will get a huge amount of value from it. And it's been a real honest chat as well. So really appreciate you spending the time with us. Just tell everybody, what it is you're looking to do now, and how can you work with people? How can people reach out to you?
Yeah, so first of all, thank you very much, gents, for having me on this. It's been an absolute pleasure. Listened to quite a few of your podcasts in the past, so it's nice to have made the cut to make it onto that list. But yeah, for now, it's just looking for building the portfolio more. So still doing the buy-to-lets, the social housing stuff, kind of looking into some service accommodation as well, but more into some commercial. But people can reach out to me by just on social media. So it's just my name, Jordan Kynoch, Kynoch. And yeah, happy to speak to anyone if they've got questions or they're interested in anything that I'm doing.
Or they've got 50 grand in the bank account that you can bugger off to Australia with.
Exactly. Well, now I've got to take the missus, so it might be need 100 grand, not 50.
You fly business class, right?
Always using my points. Always got my American Express, but Black Card, so use my points to travel and upgrade. It's the way to go.
Brilliant stuff. Well, thanks again, and speak to you soon.
Right, thanks a lot, Jordan.
Appreciate it.
So guys, hope you found that interview really good. We certainly did. And as always, we really appreciate your support. Tag us on social media, on your Instagram, take a screenshot, share the podcast, and head on to Eventbrite, where you'll find our next in-person meetup. We do them every Wednesday. Where are they, Stephen?
We've got them in Glasgow, Edinburgh, Dundee, and Aberdeen.
I was going to say, it's not every Wednesday. It's the first Wednesday of each month.
Yeah,
every Wednesday.
That'd be far too much, yeah. But yeah, the first Wednesday every month, guys, and in the main cities in Scotland. We're loving them. We're getting great feedback from them. We've got the kind of community gathering where it's very similar people that turn up each month, plus new people that come in. So there's plenty of knowledge and experience in the room of all different levels, and everyone's so open and willing to share it and share their experiences. So it's really good.
Thanks again, and speak to you next week.
Thanks, guys.